Yo, we're live. Shake my hand. Shake my hand. Good afternoon. Oh, good morning. Wow. Good morning, everybody, and welcome to London session. I think it's number 11. So we've done about 11 of these market morning London sessions, right? So you guys know the drill. If you're new, what we do is we just quickly want to make sure we understand the sentiment. If you're watching there on the live, if you get a chance, please give me a mic check. Although I think I'm absolutely good. I'd love to share this with the public Telegram group, but I might be overtly too distracted, right? Let me just quickly share my screen with you guys so that we are all on the same page, right? So oil gapped, right, to the moon, right? Oil, morning, fantastic. Thank you so much. And good morning to everybody. Oil, oil is the only thing going to the moon. Man, trading jokes. Anyways, I'm laughing by myself here. Look, so it's ridiculous, right? So our new oil target was $120. We hit 125, and I'm going to show you guys what that looks like in the charts. And I'm also going to show you guys why my new target is about 150 US dollars, and that's because it's going to take out the only presidential supply on the chart for oil, which means oil is about to be the most expensive it's ever been in the world. I don't think everybody who's not into financial markets is coming to grips with this. I don't think, people don't trade, our everyday mamas and daddies and gogos and our bosses at work are not, I don't have a boss at work, but you know what I mean? I don't think society is kind of like, come to the gripping reality of what this actually means, right? If oil crosses over these crazy boundaries, right, life as we know it is about to change. I am talking about how expensive everyday living is for ordinary people. We are all ordinary people, but I think if you know what you're doing in the financial markets, you can almost carve out some type of financial immunity, right, for yourself. If you're good with crypto and you've been investing, right, I'm not talking about people when I start investing today and want the markets to give you millions today, right? Markets are actually falling right now, right? But this is oil. Gap one that I'm waiting for, right? Price did not even bother to come back. Oil opened with the gap. Now, yesterday, if you kind of like do a bit of both, depending on your time, right? I'm just doing what I'm supposed to do this year. I'm supposed to create as much content, make as much of an impact as possible, right? So I don't know how much you are catching up with me, but if you're attending both the war rooms and the London live sessions, I really hope by the end of the year you can actually see the growth, right? But yesterday we looked at potentials, and I did say that Monday we're going to have serious gaps, right? And this is one of those gaps. A gap to the upside in oil signifies something terrible happened over the weekend. Signifies that markets are not buying the peace stuff, the ceasefires, or the simple fact that this is going to be a quick thing. So a couple of big high-ranking people have come out and said many times now that they are now getting worried that the Ukraine and Russia invasion is actually going to be months, if not a year type of conflict. And that's a big problem, all right? Now, possible Russian energy ban, right? Because remember, these guys are trying to sanction oil. They're trying to sanction Russia, actually, left, right, and center. Oil, money, take them off SWIFT. Now, they're trying to ban people from getting Russian oil. Possible Russia energy ban sends oil prices soaring. Poland, US in talks to send fighter jets, right? So if you say this so-and-so cannot buy oil from Russia, what you are literally doing is breaking the rules of a free market. Now, if you follow my long-term theory, there's no such thing as free markets. In fact, I teach people that markets are not free, they are not random, they're heavily predictable because we track the manipulation. So when you do this, when you say, you listen, man, some countries can't buy oil. Dear India, do not trade in oil with Russia. China, stop helping Russia with any type of trade. You are essentially creating an artificial restriction on supply. And when you do that on any asset class on the planet, but especially commodities, what you do is when you restrict supply or threaten to restrict the supply, and in this case, banning Russian oil. I told you that Russia is one of the second largest producers and consumers of petroleum. What you do then is you create crazy prices, right, in oil. So this is just because of the threat of a Russian ban. If they sign these type of sanctions, oil is going to go up through the roof. Somebody out there in the world can be both. You can be both in life, guys. You can hate a killing of people and one day find yourself hoping to kill someone out of self-defense. You can hate liars in the world and one day find yourself lying to save your life. You can also hate the fact that there is a crisis in Ukraine and that Russia is invading, but also find ways to profit from the chaos, right? So that's what I'm trying to say. And that's what's going on right now. There is no ways Wall Street, Goldman Sachs, America, and many other big, I'm talking about the big institutions, are not benefiting from this. It's absolutely impossible, right? Every single human being on the planet who follows supply and demand at an institutional level has been buying oil. Even the cowboy trade that Leroy didn't take, all of this, someone bought right there. It's been absolutely insane. Someone says in the comments, markets are insane. Please help me with the Palladium chart. I'll definitely look at it. I don't understand that chart, but I bought it for fun because I wanted to understand price movement. It's up 1,000% since. You buy the right things for fun, 1,000%. That is ridiculous, right? So palladium oil, palladium will always go up as long as gold, as long as things are good for gold. I'll show you right now, and we'll definitely make time to go through the chart. So you come here, as long as gold is good, and you can see gold has been going up since the last time we spoke. We were 1925, then on 1930, and then the last time I looked at gold on 1950, now on 1984. And palladium, I always tell people palladium pays. One of the first what do you call those things, Facebook pictures that I put on the 365 page when I started a Facebook 365 page 2 to 3 years ago was palladium trades. I traded palladium for almost 6 months nonstop. It moves in leaps and bounds, but it also has massive corrections. So at some point you want to lock some profits there. But I'm very happy that you got 1,000%, back. We still have people who believe that markets don't work or you can't be profitable in the market. So good on you, right? So we'll definitely look into that. So let's just quickly do what we normally do, and then we'll get into some chart work. Right. So Russia possible bans. U.S. crude oil briefly tops 130, 13-year high on possible Western ban. Possible, right? War fallout. U.S. economy to slow. Guys, let me tell you something. In about 10 days from now, Powell is going to stand up in front of the world and do two things. He's going to choose America, that is the country, the nation, the economy, or he's going to choose his career. And it's going to be an interesting decision. We're going to get low volatility or very little volatility on the 16th of March. If the FOMC does what everybody expects him to do, which is to increase the interest rate by 0.25, then markets have already priced that in. You'll remember that most crypto traders, most institutions believe he needs to move at 50. But because FOMC keeps saying, look at 2004, a lot of institutions have already started to price in 0.25, but what the market needs is 0.50, right? I just want to be very clear about that, number one. What the markets need is 0.50, but we're expecting this. But if these headlines keep creeping in, and then let me, like this one here, US wizard, war fallout, US economy to slow down, Europe risk recession, right? Well, if this stuff becomes a new fear that our economy isn't going as fast as we can, the FOMC has within its power can decide to delay any type of interest rate hikes. I told you guys that what the war is doing is not only sharpening those of you who love to learn, it's not sharpening us for the future and for the new versions, for the new, what we call market cycle. There's always learning. You always have to catch up. It doesn't happen that often, but when it comes, like now, there's a new market cycle to master, all right, which I'm thoroughly enjoying, because finally I'm also a student again, to these markets. But be very careful that if the economy slows down, and you will see it on Thursday, CPI is dropping this Thursday. That's a big data for these guys. If these guys get enough data to signify that the economy is slowing down, he might actually go, we will increase rates in the next month until we see. And that's going to send markets falling. Remember, in NFP on Friday, they say there was zero, literally no hourly wages across the whole country went up. That's what the statistics say, and I don't believe it, right? So be very careful of that. So just be mindful. If this starts to drop, if these guys keep being paid, right, these articles, economy is slowing down, economy is slowing down, we need a different plan, economy is slowing down, we need to go dovish, economy is slowing down, DXY is at a supply, economy is slowing down, DXY is at a supply, economy is slowing down. Please, I'm talking to 1 or 2 or 3 people who are listening, be very careful that what we want to see in the markets and what is actually going to happen in the market can always, 9 out of 10 times as a retail trader, be different things. This is not our machine. We just get to make money off it if we can speculate accurately. But this is your dollar index. These are yellow lines from when I get too excited in the war rooms and I just start to go a little bit crazy, then they annoy me, you know, long term, right? So I know I've already deleted the supplies, but anyway, this is the dollar in front of you. The dollar has made contact with the supply. The dollar fell despite positive, exceedingly positive NFP numbers. The dollar still fell on Friday. Let me show you Friday. Friday, the date on Friday was, because you have to really understand this. NFP was bullish, that is good for the dollar. But people lost money on Friday because they don't understand market structure. This is priced at 3 o'clock. NFP drops at 3:15. The dollar fell. The dollar fell because it made contact with the supply. Since then, in the Asian markets, the dollar has gapped up to the upside right now and is falling again. So it's slowly but surely now starting to chew this monthly supply. I'll show it to you because since I've already accidentally removed it. The DXY is slowly but surely starting to chew through the supply. Now, if you think EURUSD, you'll remember, and this is really beneficial if you came to yesterday's forum, you remember that EURUSD has 2 demands. It has a demand that it has made contact with, but it also has a demand that is below, right? So I say to you that, in yesterday when I was trying to make sense of this, if you're trying to go to C and the first demand where EURUSD right now is B and you are at A, technically the quickest way to get to C is to go through B. So EURUSD has to break B to get to that lower demand C. And the DXY is doing the same thing. This is B right now. There is a supply here that markets might need to eat through. So you might keep seeing positive runs. You might keep seeing still a strongish dollar, right, as it makes its way to C. This Donald Trump supply. That's a big deal in the markets. Presidential supplies are a very big deal. So be very careful of that. That the slowing down of the economy and the combination of the dollar being in a supply could actually flip the FOMC to being a little bit dovish, just a little bit, which could send a lot of panic in the markets, right? So we'll see what happens. If the dollar stops being a suitable safe haven, money is going to gold. If money goes to gold, palladium, silver, all of these keep flying high. All right, so that's just kind of like the overall arc of things, right? So I think I'm going to leave this area here because I do want to get into charts. I don't want to teach too much. Right, so Forex news, hit the refresh. Right, I guess this is France. We still have room to maneuver regarding further sanctions on Russia. So we still have more things to throw at them. I don't know if it was true or not. I saw this on Instagram. I never take social media to be a valid source of information. But if it's true, I did see something on Instagram last night or early hours of this morning about how they've managed to ban crypto users on Russia, or Russia is now out of crypto, right? I'm not entirely sure how that would work. Right, but if that's the case, that's also going to be quite worried in the long run. Russia, UK, jitter lingers, talks set to resume today, right? So if talks, market ceasefire across the whole weekend failed, right? So watch out for that. Anything positive, like Putin said maybe he'll consider stopping the war, markets will rally on that. Markets are desperate for good news, so check your sentiments before you take your trades. Euro wars continue as technical outlook remains bleak, right? Weak euro, strong dollar, as you saw for yourself. Risk appetite sapped. Risk appetite sapped. Sapped means, you know, when there's no energy, drained out. Oil surges as the new week commences, right? We've covered that. South Korea is suspending transactions with the Russian central bank, more sanctions. Iran says it's evaluating new components in nuclear talks. Come on, man. Oh, oil prices rocketed higher out the gate. Japan is considering banning imports of Russian oil, right? All of this is not helping everyone else. This is punishing Russia right now, but it's not helping the rest of the world for the next 2 to 3 years. Guys, recession is a long economic cancer. It takes almost a year for your local economists to say we are now in a technical recession. And by then it's too late. It takes even 2 to 3 years for your parliament to start to write new monetary policies to address recession. By the time all the institutions in your local country, South Africa, Kenya, Namibia, Zambia, wherever you are, by the time countries move to react to recession, it's taken hold of your economy. So you now need to have a bloodshed of jobs for the next 2 to 3 years. Right? We call this, I've been saying this since 2020, this is what we call the lost decade. And it's the lost decade because this 10-year plan in the financial markets is extremely bleak. And if you think I'm lying, just look at my old videos before I knew about COVID or a war. I did say we're now in the lost decade. Right now, Canada on oil can be a solution to US energy supply crunch. Remember CAD and oil, twins, right? There we go. CAD is about to do well. So be very careful about selling anything with CAD at the end for now. China reported its highly daily tally COVID-19 infections, right? COVID seems to have disappeared, by the way. Right? As soon as Russia stepped up, COVID exited, right? There we go. China is bringing COVID back into the center stage. Pelosi, she's the one who wants to lead the Russian oil ban. I want to let you guys know, when Pelosi was campaigning against Trump, she had a massive, her main campaign was on tech. She hated Facebook. She hated all the big tech companies. But if you come here, this.com, right? There's not enough time for me to do this with you. And you come to Insider, right? Insider. Because it's been done on a public record, right? You will notice in 2020, most of Pelosi, this weird lady's trades, were all in tech. Her and her husband kept buying tech stocks while publicly she kept banning and calling out, I haven't logged in, and calling out for big tech companies like Facebook and Meta. Her and her husband are heavily invested here. So be very careful. You get your information from the charts, not from loose news articles, because a lot of these guys use their political power to push price low so they can buy. Right? I've lost where I was, but I think we get the basics, right? We get the basics of the day. Sentiment is still at whack, although things could change because of war talks later on. But now she's leading the ban on Russia. She's moving Congress. She's literally leading to move Congress to ban Russian oil imports, right? And there was another, I have it on my screenshots, I can send it to the public Telegram group after this, where the United States a central bank said, Wall Street was still allowed to get oil or buy oil from Russia, right? There was sanctioning Russia, but also elements within the states could trade oil or buy oil. Now she's getting this done, right? So I've spent so much time on this, right? Russia market react from Ukraine war. All right. Anyways, long story short, things are the same. Not much has happened. We need to see if we can catch price. So let's quickly look at our dollar one more time. We want to go back to the 1 hour time frame, and we see we've got renewed dollar strength in the midst of a supply. How do I know this? Markets open with the gap up within the Asian session, right? So dollar is really pushing to the upside, right? And this is fundamentally from the fear of Ukraine and also the potential oil ban, which signals things are not okay in the world, right? Now, the next chart we're going to get into is EURUSD. Let's look at Palladium real quick so that I don't rush through it unfairly towards the end. Oh my goodness gracious. Oh my goodness gracious. How I wish I was in this trade. Look at me. Look at my old analysis, still trying to sell Palladium somewhere, right? So now this is Palladium, long time ago. This is the governing time frame. Governing time frame. We have a buy profile asset here. A clean buy profile asset. And it actually, when it's now time to drop, like when gold is dropping, what Palladium will do is it will have a sharp drop on the weekly, which means very several sharp days of falling. And then after that, it will choose to range and just wait for the next up pick, right? So Palladium is a it's literally a healthy up trade, right? You don't want price to be too parabolic. And when it becomes too parabolic, markets will correct. We'll like, all right, fine, let's stabilize the price, right? We don't want to fall back to these lows. So let's stabilize the price, and then price will be moving nice and easy to the upside, right? But now there's a clean retail traders setup for what we would call a signal, right? For the upside. So that's kind of like going well. I've forgotten what they call whether it's a morning star, shooting star. I don't remember these technical patterns anymore. But the bearish engulfing pattern that I wanted to sell a long time ago, markets have broken through, right? This was from last year, July. Markets have broken through given the current tension. This is a presidential perspective, all right? So actually, I should have done this yesterday in the war room, but I didn't. I'm gonna do it right now before I forget. Look at oil from a presidential perspective. Why I told you guys the next target is gonna be 150, because I don't thumb suck this stuff. I said 120, we're gonna hit 120, we hit 120. Now I'm telling you that we're going to 150. Because if you look at the presidential chart on oil, right, markets are technically speaking, for all intents purposes, are now in the only time in the world to sell. That's what's going on in oil. Before I go back to Palladium, oil right now is literally where markets are supposed to be joyfully selling. The problem is when it comes to oil, the major turning point, the highest point of price, did not bearish engulf. And because it did not bearish engulf, we have strong expectations. Maybe it did, but this is, to me, it's more of almost of an equal. All right, it did, but that's weak. All right, shame. Let me not be rude. This is it? No, man. I don't think it did. But let's be sure, because if it didn't, that means the supply is terribly weak, and I'll show you why. There's very few sellers in the world right now for oil, and this is the reason, right? So for engulfment to happen, the red candle technically needs to be above, so it did open above, so that's perfect. And then the last test for it is it simply needs to close below. All right, so we do have an engulfment, which is fine. Okay, never mind, that's good. But I want to let you know it's still not going to be, as long as the sentiment is what it is, I'm not changing my target. My next target for oil is about 150, right? Somewhere here. And essentially, what I'm saying is price is going to remove the supply. Markets are going to take out the supply. Now let's reset this thing. On the presidential chart, I'm going to explain why Palladium is moving the way it is, etc. It's because oil is about to go to new all-time highs. That's what this means. This is the highest oil has been in the history of humanity, about $147 per barrel. Anything from 148, it's game over. Anything from 148, it's game over. And this, right, there's still a lot of time in the presidential chart, governing chart, to turn oil to go down. The problem is oil is not being fueled up due to technical reasons or smart money concepts or retail traders. Oil is going up because of the tension. Now, if Pelosi wins and gets the ban, creates that artificial supply restriction, then this thing is going to keep going up, and we're going to get to new all-time highs. If you look at oil from a governing perspective, you'll see that the last line of defense since my 120 target has been hit is here. So right, these two white lines are just a reflection of a daily supply where oil is in right now. If markets remove this daily supply, then this is all that is left to hold oil between 129 and to my 150, and that's gonna go up. In the same breath, if you look, and we didn't look at it yesterday, gold. Right, if you look at gold, right, and this is the presidential perspective. I'm not gonna delete all my lines. I hope you guys can see this. You can see that gold completed through, because of COVID, was able to take out its major turning point, an all-time monthly, and then make a new one, and then give us a new all-time high, a turning point. I'm talking about the turning point here. Major turning point, major turning point. And now gold is moving up to create a new one. And remember, our gold target for I don't know if anyone watching today is with me, but if you're in the Senior Traders Program, you remember we're still holding gold from much more lower levels, right? Because we believe that gold has to at least get to 200. And then if it does get to 200, you can close and exit. But bearing in mind that there's still room for 2,500. Now, gold moves very slow compared to a lot of metals and a lot of assets. But when gold starts to move, what happens is it pulls up other things. You know, you guys know how when Bitcoin moves, altcoins move even more, up or down. Same thing with gold. When gold moves, copper, silver, palladium start to really play very well. So you want a 10% movement in gold, and you get a 60 to 40 to 60% movement in palladium. Right now, palladium is a precious mineral, does extremely well, and depending on your broker, it pays so nice, right? In terms of our strategy, works very well, supply and demand perfectly. I normally, if I was in palladium, I mean, and I don't know why I wasn't, which is just need to get that senior trade, a captain's program going in all the groups again. Because someone would have been watching this to alert us. But basically, you can see for yourself, long-term perspective, palladium auto-corrects, right? You get a sharp decline here because of the crisis, right? When markets were taken by storm here, and it was the best buy the dip moment of palladium's life, right? So 2008, markets rallied all the way to 2011. You get a little bit of a dip here. Markets came back up. There we go. Right, and then price kept going up. There are some order blocks that were not used specifically there, but I think there we can agree that this area has been mitigated. Right. So what I'm saying is with palladium, definitely hold it and lock, like trail stop it healthily, so that you get, if it's up 1,000%, make sure you at least trail stop to at least keep 800% of that in line with reasonable order blocks. Right. Please, in line with reasonable order blocks, so that if price still moves up, it moves up with you. But if it's coming down, crashing ASAP, and then at least you have some type of a good profit target to take. Right. So it's broken an all-time high. There's nothing to stop it now. So we have no target. So once you're in a trade and markets have opened the door, you literally have to wait for markets to let you know that they're coming down. There's nothing. There's no trick in the book. We can come here. So this is COT legacy, and it's just that my COT, the master trader spreadsheet for the academy is still not up to date. All right, still not up to date, but we can quickly double check on some stuff for you here. There's palladium. You'll see. So smart money definitely put money in here. All right, our shorts are starting to build up, so be very careful. Be very careful. You can see you got almost 2,400, long contract. So, that's a plus. So when you see this plus here, 382, they're comparing it to the previous week. So they've actually added more longs onto palladium. And you can see there are more shorts right now, right? Institutionally, there are 3,316 shorts on palladium, but they are starting to reduce them. So it's less by 143 orders from last week, right? But right now, you still have a big issue, which is, you still have more shorts on the table. So anytime they feel like taking profit, that's going to be the only issue. I'll build this up during the week, update our spreadsheet so that we can see, in the long run how things are. But it's kind of like looking like this. We are non-commercial. Remember, we trade like the banks, right? We are non-commercial. So right now, 42% of the positions in palladium represent longs, and currently 57, right? You want this number to drop a bit more, right? It doesn't mean you must close your trades, but it just means you must be ready for any instinctual profit-taking targets. So let's go to the weekly time frame. We know that there's nothing on the left. So it would help if I knew where you sold, where you bought. On the weekly time frame, we can see that markets have already equalized these two weekly demands here. Didn't break it, so that's a good sign. But definitely used as much of it as possible in here. This is from December, right? And we also know that on the weekly time frame, this is good. We're also not on the weekly time frame. This could potentially be beneficial if we had more time. So if we had another week, if we had another green candle to the upside first before price coming down, that would be good. We can see from a technical perspective, bearish structure was taken out, which is fantastic. Geez Louise, today's morning session is going to be a little bit long, but I'm pretty sure we can agree this is quite helpful. It's for me as well. Like, I mean, I'm not in Palladium. What's going on with my mouse now? Oh, fantastic. Border two. Oh, fantastic. All right, cool. Thank you for that. Right, something's wrong with my trend line. Right, so it looks like that. Let me just quickly find these buy levels. So first buy was at, and that's the one you want to protect, by the way. Your very first buy is your lowest buy. So I mean, it all depends on where you place it, right? But your first buy is always your lowest buy. So that's kind of like the buy you want to protect if you're a swing trader. I always want to protect my first buy, because if I'm lucky and my first buy survives the retracement, then I'm still in the game for another 2 to 3 months, depending on the chart. Right, so now we've got these two white lines. Let's go to the daily time frame. Let's start to have a look. Right, that's clean. That's nice. That's nice. All right, cool. Okay, breaking of structure. I'm looking for some order blocks on the H4. So buy one is here, buy two is there. So these are explosive moves, and the other thing that, you know, I mean, I don't want to, everything I'm saying is not to spark fear. I'm just trying to let you understand, you know, this is very parabolic, right? So parabolic, you remember at the end of the spear, that's where the spear is most weak, right? Because, you know, the strength of the spear comes from the thrust at the bottom, but towards the end, right, it gets very weak. So this could easily snap and break. And so I want you to be very, very careful around that. Now, we want to make some money and keep some profits, obviously. Obviously, option 2 is to close and keep all the entire 1,000%. Now, if we come to the 1 hour time frame, if you look at your H4, let's go to H2. That's good. That's some nice clarity there. All right. So if you see very carefully, markets have just been reacting purely on sentiment. But if gold is going up, we're going up. Then NFP happened, we're going up. Remember, when NFP happened, dollar went down, so all the money went to gold as a safe haven, right? And then risky assets were still punished, even though dollar wasn't going up. And so on the 2 hour time frame and also on the H4 time frame, we are struggling to find good places to docket a trail stop right now because it's still early. But because it's still early, you know, you might be, in the firing line for massive retracement, even though markets will still continue to go up. So for buy one, for example, since this is buy one at 22586, I would lock profits just below here for buy one at 2696, somewhere there, hoping that this order block on the H4 time frame is strong enough. If price was to ever come back, right, markets would bounce back up again. That's our hope. Why is it a hope? Because there's no correlation yet on the daily time frame. There's none right now. There's really no correlation. So because of that, it's absolutely hard to tell. And since it was a fun trade to take, and you're now up 1,000%, and maybe you want to get more of the education than the money out of the trade, it's completely up to you. That's what I would do. I would lock buy one just under here. So enough room to put a stop loss, enough room not to get stopped out. So my buy one, wherever my stop loss was for buy one, I'll move it there. The problem you're going to have now is buy two. Buy two is really, the most risk averse trade. It's really in the firing line. So if I go to the 2 hour time frame, buy two is perfectly hinged at an order block, right? So what you want for buy two is to take profits, as soon as possible, not to close your trade. But I'm on the 2 hour time frame. I don't know if you have access to the 2 hour time frame, but I would move the stop loss for buy two just under here. So not too tight, but just under there. So just above where you bought, so at about 3,062, right? I mean, it depends on your broker. So remember, these are trade view numbers, but you're going to have to use the spread and the actual numbers there, right? And what that means is if we are strong on the intraday trade, markets hopefully will retrace and bounce back there. That will protect buy 2 and also protect, definitely protect buy 1, since buy 1 is blocked there. But if this doesn't happen, and you don't want to just purely enjoy the research, and you also want to take some money, buy 2 works. Goes against your market, start to break these smaller demands, seeking out for stuff, then I would move buy 1 down here. So you see where buy 2, am I clear? I mean, are you with me? I'm going to make a red line, and red line is where you bought for buy 2, 2969. As quickly as possible. Thank you for everyone else for being patient as we resolve this issue. Right, so the red line is where you put buy 2. And I'm saying the stop loss to lock profits for buy 2, move it here, somewhere here, 3,066 for buy 2. And you're hoping that this will hold, right? You're really hoping, because markets haven't used a single order block. They've just been parabolic and flying. And what happens is, if you see yourself being taken out of profits on buy 2, because you're going to get kicked out here where you've locked your profits right on buy 2. Oh, fantastic! I am clear. Fantastic, brilliant. So then you're done, right? Then you quickly, as soon as you realize it, not quickly, but as soon as you realize this, it might then be prudent to say, look, man, on the daily time frame, there hasn't been a retracement for over 5 to 7 days. So what if markets need the next 2 to 3 days to retrace, to come down to a daily order block and then go back up? That would mean I must then take my buy 1 and lock profits below where buy 2 is. So you could do that immediately, or you could keep this going, right? I would leave it here because I'm a painful sucker for long-term swings and never in a rush to get money. But we are all different human beings with different situations. So I would move buy 1 up here so that the distance between wherever buy 1 was open today is still profit. So then you're definitely profit taking. And then from the profits that you've made, if it's up to you, it's your choice. If we come to the H4 time frame, I will then start to risk about 5% somewhere here and say, look, I'm going to have a buy 3 situation somewhere here and then see. But remember, it's always best to allow markets to give you a retracement on the daily, right? You really want a healthy retracement on the daily. What would that look like? Well, we'll do swing low, swing high. If, let's say, by tomorrow, markets start to retrace, so markets get somewhere up here, I don't know where this daily candlestick is going to close, but this daily candlestick is so big, and it's already 10 a.m. during the day. But you can see it's the size of a full candlestick. So I can only assume that sometime today, there's going to be a wick, and markets are going to slowly start to come down a little bit. And if you get a swing low, which would be another daily candlestick tomorrow, right, pointing to the downside, then your Fibonacci placements will start to make some sense. You could say, well, this is that 50% golden ratio area of value. I'm going to try to take, a slight risk there. What Palladium does is, because it's such a buy profile asset, it normally breaks the first few contact demands, right? And really likes to go a little bit low before going up. But what it used to do when I used to trade it, let me put it that way. I have not been in any Palladium trades in a very long time, right? Bearing in mind, if you go at Kinihashi, there are smaller, better demands somewhere there. So you could try for both those two. But yeah, well done on 1,000% gain on a trade. That's really nice. Always, thank you so much for keeping me in the loop with your trades. I love it when students tell me what they are winning and also where they are losing, right? It's absolutely perfect. Right, guys, clear, fantastic, right? Well done on that. Now, let's quickly do what we do. I see we've lost track of time a bit there, which is fine. I'm in no rush. Like EURUSD, right, as like I said, do not be in a rush to buy, right? Do not be in a rush to buy. There we go, dollar went up, literally started moving to the upside. EURUSD is now inside the first daily demand, inside a governing demand, and markets have broken it through. The black line represents yet another type of demand, right? If I go to the daily, a deeper demand where markets are really sitting here, okay? And markets are sitting there. Will price go up today? I don't know. I don't care. I'm not trying to buy EURUSD right now. I'm not trying to buy EURUSD in the short term. Sorry, I'm not trying to buy EURUSD anytime soon until I get it, right? Those of you who are buying EURUSD, just be very careful that the climb up is very, treacherous, right? So Asian markets did open a little bit positive, even though the dollar also gapped up, right? So be very careful, right? Be very careful that this doesn't send you to the downside at about 2-3 p.m. today. And if it does, then you have this to worry about and that to worry about. It's just a long list of worries up until you can get to a point where market structure is now broken, right? So you're looking for a downward trend here on the 1 hour time frame, you know, something break, a clean trend break, a clean retest, and then all of a sudden you'll see me wanting to start to buy euro, granted that it is, you know, sitting at a demand. But until then, I have no intentions of it, right? If we look at our chart where we were marking all our London session moments. Oh, I did. I did speak about Palladium, and look at me. I didn't even go back to take the damn trades, right? Also, focus on the trades I was already in. Fantastic. Well done. Thank you for using that information and attending war rooms. Yeah, Palladium moves. It pays so well. I mean, I don't do lifestyle content, but if I did, I'll tell you that in Palladium, Palladium bought my first car after losing all my cars after my debt recovery stages of life. Palladium was one of the first trades that got me a Jaguar, and it's through patience and holding. And I posted that, you know, one of the results back in the day, 2016, I think, 16, 15. Jag is 2000. Okay, yeah, 2015, May of 2015. Thanks to Palladium, it's a runner. It's a good runner. It's a money maker. As long as you have a positive gold, you always have Palladium. So you kind of like almost have to. You can trade outside of such situations, but when there's a problem and money is running to gold and safe havens, Palladium is your ticket. So thank you for using that information. Right. So this is EURUSD on the intraday charts that we're using. You can see nothing but blood, right? Do you remember this? This is a sell that I said, cowboys, enjoy yourself. I'm not gonna take it. I feel like an idiot now, right? I feel like an idiot, right? Clean touch. I mean, I probably would have taken profits because we're now in a governing demand. But you know, this is to encourage you to make decisions for yourself. When you listen to me talking, you listen to someone who's been trading for almost 9 years, number one. Number two, someone who might not need money right now. Maybe I have everything I need today in my life, and the next time I'll need money because of how I've been trading for the last 2 to 3 years is December. All right, you guys saw I had a massive take profit on a Zoom stock trade, a trade that I took 2 years ago, paid me, you know, earlier on this month. Between that money and a couple of my swing trades, I just closed DXY. I closed a 260-day dollar trade that I took, and you would not believe how much that was. That was an index I was buying and holding with 3 entries long term. So when I say it's a cowboy trade, I really mean it. I mean, look, I'm not going to take it. And remember, the cowboy trade was actually here, by the way. I literally didn't even notice that there was a supply up there. I did say that I would not buy, I would not sell here. The market's broke, which was a good warning, but maybe I should have considered here. But I really wanted an upward push on euro. I've always wanted euro to go a whole lot higher than it has been before coming down here. But my whole point is, if you've done my course, you know, take everything I'm doing as education. But some of these cowboy trades are doing well, right? Leroy doesn't have to take. I don't have to actively trade for months. I've got many swings from last year still holding on my other trade. I mean, platinum is still doing very well. I'm on natural gas. I literally did Facebook on a 365 Facebook page last year. I was holding natural gas. The poster there, I'm still holding that stuff. I didn't know there was going to be a war this year. I just knew markets were going up. Copper futures, I'm still in that trade, copper. So if I say it's a cowboy, it means there's risk involved, right? But if you think, you know, you're not busy like Euro with 25 million other things, and you can actually watch your charts and watch your trade, some of these trades might actually make you a whole lot of mullah. So since the cowboy trade, EURUSD has done quite well, right? Almost 300 pips. 300 pips. It's good money. That's good money, right? So, you know, on this particular platform, just be very careful. This is midnight. Be very careful, right? This is midnight. Markets are creating a PCP in the opening today to go a little bit up, but how high can they go? That's all I'm asking you to consider. Based on the sentiment, will this work? Leroy, as usual, be like, I'm never going to take the most immediate, obvious supply. I don't want to be played. So will this work maybe? Will this be a good place to sell? Leroy would say, I've never ever sell inside a demand. That's just me. That's just me. I've never. Yes, markets can go down even more. Markets could be getting ready to remove this demand. Remember, I've told you guys, this is ABC. Markets right now are inside this demand here, and this demand is B. And I say EURUSD wants to go to C. Where's the C demand? Down there. So all of this, according to my theory, needs to be removed, right? All of this. So technically speaking, when you come to the 1 hour time frame, you're looking at opportunities to remove it. The problem with Leroy is Leroy never uses his money to remove institutional levels. He allows the institutions to do that himself because Leroy is a bloody patient trader. And that might not be good for you and your financial situation. So you get direction and you make decisions. But if I was to be a cowboy, then sure, I'll try and sell up there. I wouldn't sell here, personally speaking. This is like Texas cowboy stuff here. This is African cowboy. You know, you can even ride a cow, a Nakto cow. This is like riding a horse and jumping. This is like a nice, slow-paced African bull cow and trying for risk there. Both trades, sell trades, are high risk based on what we know about supply and demand. But both of them are positioned perfectly for the risk sentiment in the markets right now. Remember, they will do well if dollar falls, if dollar respects the supply it's in. All right. And last we checked, dollar at the moment was not thinking about respecting the supply it's in right now. Euro pound, right? So Euro USD trying to do this right now. Isn't this interesting? In Euro USD, we only have the half of this PCP done. Euro pound is already led the way up, so we are right. And then in Euro USD, I'm saying I wouldn't sell here, but you might want to sell there. I might want to wait to sell there if I'm selling, right? So watch out for that. Let's look at the correct charts for all of this kind of stuff. Is it? Oh, where is Euro pounds 1 hour charts marked up? There we go. So I would wait somewhere here. Remember, again, you know, as a dreamer, you know, I wanted to sell, you know, further up than where we are. But as markets have decided their own path, I have no choice but to follow suit, right? So all of these trades are now high risk. Euro pound is slightly different from Euro USD. Euro USD is sitting on top of a demand on top of a demand. Guys, in Euro pound, right, it's heaven. It's gone. I don't know if you guys notice this stuff. This is why I always say, you know, enjoy the small time frames, but don't, please, please, don't forget that money, trading like the banks, comes from it. You see here, there's nothing. Nobody can stop this thing from falling. Not Troy, not Thor, not the Avengers, nobody, nothing. There is not a single demand in the world ready to stop this thing. This is a trade I want to get in so bad because I know that an intraday position carefully placed inside this monthly governor or inside this whole area, an intraday position can become the swing trade of the year, right? I know that this is where my skill set is, where I make my money. I open a trade today, I kiss my family goodnight, and I tell them daddy's working, and 4, 5, 6 months later, I've got 470 pips to talk about. This is a good trade, right? So Euro pound on the big picture is falling apart. We finally removed Boris Johnson's demand of 2019. It's done. So now here, I start to really look. This is where I really want to hunt a bit. I go, oh, on the weekly timetable, break of market structure. Interesting. But this is not a bearish engulfing pattern. How annoying. This is a bullish engulfing demand that was taken out. Interesting. I wish this was a bearish engulfing pattern because then I could come and wait somewhere in there. And I'm going to go Kinihashi and then go, all right, it's not a bearish engulfing pattern, but you still have a module 1 imbalance of the weekly time frame because you really want someone sent me a WhatsApp this morning. I haven't opened it, but I read a little bit. They're asking about module 3 and 4. It's definitely dropping this much. And guess what? I have good news. I have good news for everyone. I'm going to announce all the stuff. If you are a registered 365 student under the sound of my voice on the 7th of March, me and the board had a back and forth, I won. That means all registered students, whether you registered last year, registered 2 days ago, as long as, let's actually make this even better. As long as you register before the 11th of March, which is this Friday, Module 4 will also be for free. All right, so the board didn't want us to charge too much free stuff, blah, blah, blah. Long story short, if you're in the academy already, or you register by this Friday, Module 3 was always going to be for free. Module 4, Trading Psychology, is also going to be for free for all current existing registered students, which means anyone who registers after that will then carry the cost of the module, all right, which was the same price there. There will be no extra cost. So you guys get what I'm trying to say. Long story short, so just if you're already registered, it's okay. Don't save. There's no money to save for. The Trading Psychology course is completely for free, and it's dropping. Definitely this much. I just had to clear that stuff up. Like I think I announced this stuff. The drama I was going through around this stuff, a while back. Right. So we've got a basic module 1 supply somewhere in here. It's not strong, right? But you'll have to agree that at some point in time, markets do break a demand, right, which pushes us to the downside, and then markets give us one and very crazy retracement back up 2, 3, right, a very weak one, right, and then is the problem with euro pound is you always get spoiled for choice, right? Then there are all these other areas here, but I think we might be lucky enough to find a better area of value on the daily time frame, which is really where we are. And I'm going to get to the 1 hour. But I'm just simply saying this is that trade that you really want to focus on, because this trade will pay you on days where you are wrong in the markets on other charts, right? So in the daily time frame, I have something going on here. Number 1, I'm not excited about it, but I do notice that markets created a PCP to the downside, and then markets did try to retest that PCP. And whether they did or didn't is going to be up to your discretion about areas of competition. But granted, if markets come up and then they turn, it means they got their target with or without you. When markets come up and then they turn, it means they got their target with or without you. And so this target clearly was definitely tagged, and markets are now dropping. So now I'm looking for a place where I can mitigate. All of this is in that crazy weekly supply. I'm looking for mitigation areas where markets have not come back to fresh areas of value. And what I have right now is a situation that looks like this. So if I start to delete 1, 2, 3, this is all I'm left with on the daily time frame. And I've got a clean imbalance, right? So I know for a swing, I want price to come back up there one day. That's all I know. I know for a swing, I want price to come back up there. I can see on the H4 time frame that we have a market gap. So I'm worried about that, because markets might want to first fill that before going down, right? Markets might want to fill it before going down, and markets could fill it with a long wick, with a very long wick, and then a body going to the downside. I can also see on the H4 time frame, we have everything we need to let us know that price really wants to rock and roll. The only problem now is I can't be stingy with my stop loss here, because what if markets need to close this gap, right? I can't say, well, this is the area, this is it, we're done. Right, now, you can see with market opening today, euro pound is already making its way up, all right? You could assume that markets might get stopped somewhere here. This assumption would not be wild. It would not be inaccurate. This is where the break of market structure is. There's an order block there, etc., etc. I don't want to stop anyone's blessings by telling you that's a cowboy trade. It is a cowboy trade to me. If you take it, know that you are accepting a lot of risks and pain in your life, but you could also make a lot of money in the process, right? Why? Because there's just always a better supply, and you want to target better supplies. Let's have a look at the 2-hour chart. I'm introducing these different time frames for you, which will become your best friends during module 3 anyway, right? This is too easy, too close, too soon. Markets could drop. Problem is, price is coming up too sharp, too strong, and we know the sentiment is a bit off. So why not wait at least somewhere up there by the white line, at least there, all right, at least, something like this. Why not target this range and have a stop loss there? I mean, I would go as far as what if you just were to swing this and look to the left? But then I'll be like, but if you're going to do that, why don't you just wait for that upper thing? And then you'll be like, Leroy, this is why we never get triggered, because you're too cautious in the markets and we need to take risk. And I agree with you. But risk number one is by this white line where there was a breakout structure to be the area that gives you somewhat of an imbalance. There's a better trade above though on the 2-hour time frame. Let's see what it looks like on the 1-hour time frame. Definitely. So I mean, there's all free advice. There's a better trade up here. All of these zones could work, right? You'd have to convince me why you think they would work on the 1-hour time frame, right? I mean, if you come here, you know, you're stuck with a retested zone, which is fine because we believe that markets can give a fresh touch and a retest. If you come here, I can't even see what the hell is going on in here, right? But if you come and at least take a shot there, even if you get stopped out, you at least know that you did your part to wait as high as you could up there. You got a fresh touch, etc., etc. Then for my daily swings, the swings I want here, the intraday trades I want to get triggered somewhere in there. Now, if we translate that to a Euro Pound 1-hour chart of everyday intraday trading, I'm assuming the 1 hour that I'm referring to is this one all the way down here now. That's what I'm assuming. So maybe I'll take a trade there, personally. All right. Maybe I would take a trade there personally, although I can see that this is also starting to look delicious. Somewhere there, was it this one, right? One of those two, right? You'll just have a look, but I just don't get, why markets would rally across the opening like this and then drop. And honestly, guys, it's a sentiment market, so this is not surprising. It's not surprising. It's just, to me, well, how strong are these buy opens, right? So because you're going to sell up until there, I'm assuming, before they push price up against you, right? So I'll rather sell there and then hope to see a continuous. Remember, at the end of the day, Euro Pound is not like EURUSD. Euro Pound is not confused. Euro Pound definitely wants to go down. And so you might say, well, this is the only time it will go down. I must catch it now. And I'm like, okay, cool, I hear you. But I would rather wait for these 1, 2. I'd rather sell here, get stopped out, and then try and sell there again in that process. So that's Euro Pound. We're only going to go for another 7 minutes, guys. You know, the sessions are meant to be short. I do apologize. Not really. In fact, we learned quite a lot. So, you know, it's just whatever we can do in the mornings within the hour. All right. And if anyone has a question, especially if you're a student, use this space. EURUJPY, I'm showing you EURUJPY because I do believe it's a nice big runner as well, taking out another demand. Just the only problem with it is it just doesn't want to come back. They want to come back to collect some orders, right? But up there is where we've been waiting for Euro Pound, where we were supposed to sell, where we didn't get triggered. Markets literally missed some of us, or missed me at least. I don't know, maybe some of you guys are in and I don't want to talk for you, but I wasn't triggered here, unfortunately, so I'm still waiting for that, right? But since then, you know, markets have been on a rampage, and I think acknowledging areas of value where daily demands were taken out would be our greatest bet, right? So that's a good sell place to wait. But also, such trade ideas, you must imagine, insinuate that markets are going to rally up. Just like Euro Pound, just like EURUSD, there's also a supply right here waiting for markets to turn from, guys. So this could be the greatest mistrade of the week, where I say, look, man, these supplies are too close, ignore them and wait for above. And all these assets turn on these supplies, right? So you have to make this decision for yourself. I know for a fact that today I can't babysit intraday trades. There are a lot of people waiting for my working 3 years financial stock notes. And at some point during the day, I need to catch up with the COT data. So I know, personally speaking, my mind is not even focused on trading today. So because of that, I might not want to take such small term trades and babysit. By babysit, I mean, yes, I could set and forget in terms of entering and stop loss, but where am I going to take profit? Am I going to stop here by the turn? Because if yes, then the trade is not worth it for me, right? Risk to reward ratio has to be 1:3, right? Am I going to let price drop a little bit further and see where it lands tomorrow? If that's the case, then even better, because long-term trades or swing trades rather are far much more healthy for me. But there's this option here, it's a cowboy trade. I'm letting you know, but if you want cowboy, for real, if you want, you can hold. I'll probably put a pending order here so that I can monitor how this looks tomorrow, somewhere up there. Okay, that's EURUJPY. Let's look at pound USD, my NFP trade on Friday. Right, so pound USD, the trade idea was simple. There was a bearish candle just before NFP data was dropped, probably like an hour before, like 30 minutes before I left my computer. Put a sell stop underneath here, set and forget style, stop loss all the way there, and then markets just dropped and broke through this demand on Friday, got home, took profits. Why? Because there's no ways you're going to have a value-based demand on the H1 time frame and also a bearish engulfing supply. Right? Those are module two areas of value that we teach on. And if the trend is down, then the counter order block will always take out the opposing one, right? So that was an easy NFP trade, but I told you why as well. NFP was always going to be positive. I mean, I walked you guys through NFP in painful detail, right? So what is pound USD going to do today? Pound USD, I'm looking for my intraday charts. Right, so we're looking for 9 a.m. again here. Right, so markets are opening to the downside. We've got a breakup structure here. You know, I hate to say it, but remember, pound USD has not yet broken the governing demand. Unlike EURUSD, pound USD still has a higher demand before it properly falls to the March of 2020. Because of that, you know, you could get some strong action to the upside at some point. And if we do get that type of strong action to the upside, I would very much love to wait for a sell here on pound USD. This is where my pending orders are going to go. In terms of today, I do nothing. I don't care. I'm not interested. There's nothing for me to do in the markets. Cowboys, there you go. Cowboys, good luck. Somewhere there, right? Nice target down there. But I would love for pound USD to come back up here. Honestly speaking, I would very much love for that to happen. To use the order block that used to break something fundamental in the NFP, area of value, that would be a beautiful take. So I'll be waiting for that there. In terms of this market phase, market leg, I'm just gonna draw from there to there. Yeah, definitely sold on this level. But it seems to me I might have to wait a bit for price to get this. Because pound USD, I'm looking at the time, we've got 1 minute, 1 minute. What could we look at for exactly 1 minute? I guess we could check up on the FTSE. I am wanting you guys to get used to this index. You know, it was sitting at oh man, we missed out on a good sale. It was sitting at a governing supply. I told you guys this was going to happen. Governing supply is the COVID supply. It's the only index that hasn't broken out of the supply. All right. And then there we go. Switch, swipe, gone. Switch, swipe, gone, right? So markets literally have disastrously fallen. There's a student who wants me to do some work on Nikkei and Nasdaq, right? So I'll be working on that stuff. I have not forgotten about you. It will be just a separate video where we back test the stuff so you can see what I mean by how they mirror each other, right? But yeah, FTSE 100 is falling based on the February 2020 demand and market tension and war, and the fact that the war is literally by its door, right? So this is the London Exchange, and they recently removed Russian stocks from the FTSE, right? So you know, there's just a lot of stuff that would really require this thing to sell. Right? Broke through the demand that the gents were selling to, right? I think Mbasa and Alvin were selling there. Markets got to that particular demand, but had a strong retracement to the upside before coming back down. Ever since then, markets have come back down quite violently, breaking. Fantastic. Now that FTSE has done this, taken out two demands, I am now interested in swinging it. So I'm going to wait for it there. Now that you've done this, Mr. FTSE, and you've told me that you are still heartbroken, you're not yet over your ex, I will be taking this journey with you. So this is where I'll be waiting for FTSE 100. Right? So for me, it's worth the risk, right? I don't care what the sentiment would be. For me, this area here is absolutely worth the risk. Right, everybody? Thank you so much. Have a good day. Oh, wait, someone says I just exited a Serena. Really? There we go. There we go. There we go. 700 students, you guys are making money quietly, man. You're just chowing money quietly. Well done, guys. That's brilliant. So EURGBP, I've been talking about this for 4 weeks, 5 weeks, give or take. I don't know, like long term. 700 damn pips. Well done, buddy. Well freaking done. Right? No, it's a classic sale. Like I spoke about this. It is a classic sale. We looked at it in the war rooms. We looked at it, in our morning sessions. Make that money, guys. Make that money. Proud of you. I hope you're proud of yourselves. You're doing this for whatever reasons, right? Have a good day. I thoroughly enjoyed being with you this morning. I'll see you guys tomorrow at 9 a.m. We'll try tomorrow to keep it, into the hour that is prescribed. But if there are questions, please bring them. This is literally AM classes every day. That's what this has become, right? So please take full advantage of this, so that one day when I decide I'm too tired or too busy, I'm not saying that's going to happen, but the day I have to focus on my other things, you have sucked as much information from me as possible, right? That's the whole point. All right, I appreciate you all. Shake my hand as usual. Please don't forget to like the video if you haven't.